Hi, welcome to the Market Alert for Thursday, the 22nd of June 2017. Bank of America. These markets are very weird. And they're not wrong there, as the chief volatility expert from Bank of America, Benjamin Bowler, has recently pointed out. The markets are very weird, something that I've been saying for some time. And this was the case for yesterday as well. So let's have a look and see what happened. Starting off with the British pound. In the morning the market was sideways. We expected a bit of this, and the market put in a potential sell signal. This failed, the market coming back to the 126 level, finding support and then trading sideways. I'm just going to bring this back a bit because, as we mentioned in yesterday's Market Alert as well, Andrew Haldane was going to be speaking, and we also had the Queen's speech out at the same time as well. So the market comes back, trades sideways, and then starts to move higher, met by some selling, and then we see the market just skyrocket up there following his comments. Now, as I've said many times in the Market Alert, central bankers don't know what they're doing. And just to confirm this, the day before we saw the pound drop. Carney says it's not time for hikes. Queen's speech in focus, whatever, that bit's irrelevant. But he was saying that there was no need to raise rates, which we saw in yesterday's Market Alert. However, in the Telegraph reporting yesterday, pound surges, Bank of England's Haldane turns hawkish, which means that he wants to raise rates, and oil heads for steepest first half fall since 1997. So here you've got a contradictory opinion and picture from the two central bankers, or one from the governor and one from one of the other members of the MPC. So no surprise there really, but I thought I'd just point that out to you, that left hand doesn't know what the right hand is doing here. So the pound just traded sideways. We had a potential buy signal there, but this wasn't filled, and then the market just traded sideways. And then we headed over to the Dow. But just before we look at that, let's have a look at the daily chart of the pound and see where we are with regards to what's going on. So let's have a look in the bigger picture. You see the market pulling back off the lows that it made yesterday morning and bringing the pound back above the 62% and also the 126.50 level as well. So this market just sideways on the overnight, which we can see there. Just see there, not an awful lot going on at the moment. So moving on to the Dow, well, an interesting picture here for yesterday. The market attempted to move lower, and it certainly fought with itself. You can see the buying coming in here. As I keep saying, they don't want this market down. They're going to do whatever they can to keep this market to the upside, no matter what. Keep the illusion alive that everything is fine when it's not. What I've done here is it looked like it could actually move back to the upside, so move the stop down to reduce the risk 50% above. We've got 3 bars here where the market's traded sideways, and it's a case of trying to reduce some of that risk instead of just letting it shoot up to the upside. We also have the crude oil inventory figures out on this pink line here at 3:30 p.m. So let's see how the market panned out here. It actually got back below the entry price there, but we have the obstacle here, and the way we've got this support here at 21,450. So again, you've got to keep this in mind. The market's got to break this if it's going to move lower. And again, what I've done here is just try and reduce the risk as well, with the market making these lower highs. I wouldn't normally do this, but we've got the crude oil inventory figures out, and crude oil, as you saw in the Market Alert yesterday, the prices are actually falling and have continued to do so on tonight's or last night's overnight market as well. So this has now come back into focus where it was a non-event, and I'll just fast forward here. You can see the market moving down there a bit, and you can say, well, look, you know, we've got the news item out. The worst case scenario has come out at break even, so stand aside and wait for the market to release the figures into the market. Now this buy signal's a non-starter because we know that we've got a problem with crude oil at the moment. It's falling. They're going to be looking to the stock figures which are about to be released, and I'm just going to come back here, see if I can pick that up for you. So I'm having a look at the crude oil market just to see what it's done on the overnight. It's found a bit of a bounce from the drop over the last couple of days. This is a 15-minute chart, just having a look. Now come back, waiting for the news, and then I go and have a look at the news. This is released, and we see we've got there a deficit of minus 2.5 million barrels, which is bullish for the market. And then back, we see the market reacting, waiting for it to decide what to do. It starts to move higher, and then it is met with selling coming into the market. Huge amount of selling here. Market comes off the highs. That's a bearish signal. The market then trades sideways, comes down, takes out the trade, and then comes back because they don't want the market down, so they bring it back. And once again we see some more selling coming into the market as prices come off the highs, and we see again the high volume there. Prices sideways once again, and then they move it lower, and again the market is stopped out. And this is what Bank of America were talking about, how weird the markets have become. It's just, this should be a straight deal in this situation. Crude oil's dropping, the demand is down, the stockpiles are down, but even on that stockpile and moving the market high, they want to get it up. But whatever they tried to do, and this is going to be the downfall of this market, people getting out, you'll see that the selling coming into the market is what's stopping this from moving higher. And then at last the market moves lower, and you'll see the scalp pit there heading towards the 21,400 level, which we've got here. But as ever, as we go through the afternoon session, the quieter part, you see the market being brought back and then back down again because it's got no direction. But then we see the plunge protection team come in late on in the evening part. You see there's a sell there, then there's a buy, then there's a sell, and eventually the buy side wins, and as ever in comes the plunge team and brings the market back. They wanted it back above the 21,400. And again, this is the hallmarks and characteristics of a market that is being manipulated, and as I keep saying, they want it back on the highs. They're trying to keep this market on the highs because I know from the implied volatility that down the line something big is coming, as do Bank of America, Goldman Sachs in a report yesterday as well, talking about low volatility, that it can just snap and then you've got all sorts of carnage. We did have another sell signal here, this one towards the close at 8:30. It was qualified a bit late on in the session, however still a chance to make something of it if you wanted to, but personally by the time you've got the buyback by the plunge protection team coming off the lows, and after the rest of the earlier part of the session, where I'll just scroll this back, where the market was really struggling, there was quite a battle going on here between the buyers and sellers based upon that crude oil report. And just speaking of crude oil, it's worth having a look just to show you what's going on here as well. Just bring this in here, we'll turn it into a daily chart, and you can see that we've got a situation here where the market is moving sharply lower. Yes, you're showing a global slowdown and no demand for crude oil as well. We're now at $42 per barrel. If we crank this up a bit, See if we can get a monthly chart on this one, maybe. Yep, that's useful. We can see that in 2014 there was a 73% drop in crude oil all the way through to August of 2015. The market has been sideways, but you can see now it's starting to move back, and there's always the potential to actually come back and retest these lows here. So again, keep an eye on crude oil, because it's one that tends to be forgotten in the background, but stock market should go down with crude oil. That's the way it works, because if there's crude oil prices are rising, that means there's a demand, there's an increase in output, and so on and so forth. But we've got a situation here where the crude oil price is actually dropping, which again points to the background activity of the economy slowing. Right, I've waffled on enough here. Let's just have a quick look at the Dow Daily, the news, and then a quick look at the implied volatility before concluding. So in the Dow Daily, we've got a situation where the market is finding support once more. I keep saying they want the market up. You can see the trend there, the market coming back to the sort of trend line there, bit of a crude one drawn, but you get the idea, and back towards the all-time high there. News-wise today, what have we got? We've got another FOMC bod speaking. We've got Powell out at 3 p.m. medium news impact item as it's classed there. Again, he's going to be talking the market up. There's no doubts about that. Right, let's have a look at the implied volatility. So the implied volatility is down slightly, given that the market was to the downside as well yesterday. So again, adding to making life slightly difficult. 8.33. We need this to get above the 9%. We need it to break out of this range. It's not helping at all, because the market's not getting enough momentum once the order price is filled, and that's a simple thing. If you didn't have the implied volatility to look at, you'd wonder why it was going on in the markets. Whereas when you actually look at this, you can see exactly why we're not getting the momentum that we should be getting, because of the low volatility that is factored into the market at the moment. Right, that'll do it from me. As ever, thanks for watching. I will see you in the next one.